Hello and welcome to CRU's weekly ferroalloy roundup. I'm Alex Anderson, and today I'm joined by Tom Bucic to take a look at what's been happening in the antimony market. So Tom, tell us what's been happening. It looks like prices have been falling recently in Europe.
Hey Alex, yeah, I mean it's not it's not been a good couple of months to say the least for antimony. Recently in general we have been seeing lower demand due to buyers having healthy stockpiles, and they're getting all the quantities from their long-term contracts. So spot demand has been illiquid to say the least. Few sales here and there. So obviously some traders now are looking to liquidify some of their positions. So yeah, it's been kind of on a negative trend, and from what we gather as well, in China we have been hearing that there have been lower replacement costs, and people have been quoting that they can buy material around 7,200 to say the least. So yeah, it's not been good at all. But I don't know. Are you seeing different perhaps in the States for the time being, or?
No, I mean, the same sort of thing. So, I mean, obviously you can see on the graph, it's been, following sort of the same trend here in the U.S. We've been hearing of some lower offers sort of around the 340 per pound level, but spot business, same thing, has been very limited. Seems like most people are covered on contracts, so there really hasn't been much to speak of. So, most of the concluded business that we have been getting has still been around the 345 per pound level, which is our current low. Yeah, just really waiting for activity to come back around, and so we can get a really good idea of where the trend is heading. I guess, are you seeing any sort of different ideas on what could happen in the near term? I guess, how long are you expecting prices in Europe to continue falling?
Well, yeah, that's a great question, and for now, just because of the weakened end consumer demand, as a result, that's why we are seeing these cheaper replacement costs, some more competitive offerings in the European market. So it's hard to say. On one hand, we are seeing this weaker end consumer spot demand, just because they're covered and there's enough inventory, whilst on the other, we are starting to hear. Possibly some producers in China are looking to stop offering because prices are, reaching the 7,000, let's say, dollar mark barrier, or the psychological barrier. So I don't think many people want to see prices get closer and closer to that, to say the least. So yeah, we'll have to wait and see how things look like moving forward. And the real question is, how does demand look like? And that will definitely try and hold prices and suppress prices from falling further. But I don't know if you're seeing different in the States perhaps for near term or.
No, I don't think so. I mean, it's pretty much the same thing. Like you said, demand is really the major issue right now, and just sellers having enough stock. So I think it's just a situation of we need that demand to tick up for this to sort of stop it at any point. But it's really interesting you saying that the Chinese sellers might sort of step back to help bring some support to the market, because yeah, getting down to 7,000, that's going to start scaring people a little bit, I think.
To say the least. No worries. No, yeah, I think overall that's pretty much what we're seeing this week, I guess.
Yeah, well, thanks very much, Tom, for the market insight. For more information on what's happening in the ferroalloy space, be sure to read the full CRU Ferroalloys Weekly Review that's delivered to your inbox. Thanks.